Thank you all for joining us today. Today we have a great webinar for you all on AI and property data and improving loss ratios for home insurance carriers. And my name is Larisa Bedgood. I will be your moderator today. I am head of marketing with PGM and Home Factors. And with me today is my fabulous team. I'd love to introduce you to Michelle Taves, Dillon. They are part of PGM and Home Factors. And the star of our show is Efram Ware, who is with Homeowners of America. So really excited to chat with you all.
Thank you for having us.
Yeah, so let us move on and get started. I'm going to start with you, Efram.
Sure.
Really about, I think, let's kick it off with some of the challenges facing carriers. And you're seeing, I know, a lot of different challenges in the industry today. So what do you see as some of the biggest hurdles, in your role at Homeowners of America?
Sure. So carriers and insurance in general have faced a number of challenges over the last couple of years. Some of those challenges have been external, everything from weather becoming more severe and more frequent, claims frequency and severity changes through our industry, inflationary impacts, hardening reinsurance markets, just a variety of things. As we work through those challenges, one of the things that we decided to do was really look internally and identify things that were within our control. And as we started digging deeper, we began to understand that there were some areas of opportunity for us as a carrier. And so we've highlighted some here on the screen. As a property or homeowners carrier, as claims frequency and severity change, we began to understand that we did not have all the insights we needed regarding the risks that we were insuring. We were striving to be profitable and grow the company. We wanted to have adequate rates in place and get the right rate for risk. And we wanted to become more efficient. Fortunately for us, we had access to what we were calling at that time Porch proprietary data. We now call it Home Factors. Over the last couple of years, we've had an opportunity to integrate that data into two core foundational parts of our company, pricing as well as underwriting. We made some significant changes on the pricing side. We introduced two models, one a constrained model, the other unconstrained. We also introduced and revised our underwriting model, both of which have been a tremendous benefit to our company. We're very enthusiastic about the results that we're seeing over the last couple of years. We've had best-in-class loss ratio results because of the changes that we've made and introducing those home factors into the work that we're doing.
We will be doing a little bit of a deeper dive on some of your successes a little bit later on in the presentation. But Paul, I know you and I have chatted at length about how impressive it is that, Home Factors has data on more than 90% of U.S. homes, which is, a pretty amazing number. I'd love for you to kind of break down a little bit more what is actually included in this data and kind of what makes it so special.
Yeah, for sure. Happy to, Larisa. And just tagging on to what Efram said, what we're learning is that as home insurance carriers, you really can't underwrite the same way you have historically. And Home Factors are really helpful in terms of, moving your underwriting forward to be able to predict risk better than you ever have been before. So Home Factors, what are they? Home Factors are an indication of the condition of the home. This is both exterior and interior condition, but uniquely interior. This is where carriers have struggled to understand, some of the issues that aren't visible, for example, through aerial imagery. And as you said, Larissa, we have home factors today on 90% of single family homes. There are 50 home factors today, a handful of examples here on the screen, which are, soon to be 100 home factors by the end of the year. And so examples might be whether an electrical panel, how well rated an electrical panel is. As we know today, we're plugging in everything, including electrical vehicles, which creates fire risk if you have an underrated electrical panel. Another one that we're hearing is really helpful from carriers is foundation repair or replacement, and what that means in terms of evidence or potential for water damage. This is a concern of carriers, whether you're talking about a cat event or non-weather water loss. If that foundation has an issue, when you write the policy, it's probably going to result in a fairly large claim if it hasn't been remediated.
So I can tell you that, being that I head marketing, we have a pretty fantastic library of case studies that talks about the individual factors on our website. You can see that on the slide below, but invite you to check that out. Contact information if you have any questions for Paul, Michelle, any of our team, Efram. I'm happy to introduce you to them. So, Michelle, the data is only as good as the sourcing and the way it can be activated. And I know we have a really fabulous, AI platform. Love for you to kind of walk through what goes into all of this.
Absolutely. Happy to be here. So, it's interesting because we hear AI is almost like the buzzword, right? Going around the industry. And when people see AI, they don't really, it could mean all sorts of different things. And so for us, what it means is that we've created the ability to use technology, machine learning, and AI all teamed together to be able to bring a whole bunch of unique insights together into one place and then be able to make it actionable. As you said, and I think how when Efram kind of first started, right, the source of the data is really what creates and makes Home Factors special. We, across all of Porch, we have access to some really unique and proprietary data across all of the different businesses across Porch. And we have millions and billions of data points that are going through our pipes every single day. And so what we've done is it was a labor of love for sure, of being able to take all of that data together, being able to create a process to actually extract it from many different forms. Think of images, think of text, think of PDFs, think of all of these different types of way that data comes into different types of systems. And we've created the ability to extract that data, to be able to understand and validate our extract process, and then to be able to take that data and actually create insights across all the homes in the US. We say 90%, to be honest, it's probably closer to 96, 97% of all homes in the US that we now have information. And the information isn't commoditized information, right? It's more than square footage of a property. It's more than how many bedrooms in a property, right? It's what kind of piping is in that property. It's, do we have any water damage in that property? It's what are the outlets look like in that property? What type of floor, what type of appliances? So it's really cool, unique data assets that we've been able to do. And then we've also been able to make it actionable, right? And by that, we mean that we have the ability to actually deliver the data for many different types of use cases across many different types of platforms, technologies, UIs, right? Because the first two steps aren't meaningful if you can't make it actionable, if you can't actually deliver the data to a carrier like HOA.
That is fabulous. One of the things I wanted to ask Michelle, and I'm not sure if you're able to go into this in depth, but do you have any indications of factors that are upcoming that we are working on that are being released either maybe later this year or in the whole brainstorming kit?
Yeah, absolutely. As I don't remember who said it first, but I know somebody earlier pointed out that we have about 50 in production. We have a goal to be over 100 by end of year. really concentrating on inside of the home. However, we do have some outside unique factors that we're working on. Some of the new and upcoming ones for inside of the home we are actually weeks away from rolling out location of water damage. So it's one thing to know that there's some type of water damage within the home. We're in the process of actually being able to say if that water damage is on the first floors, on the second floors, in the kitchen, right? To really give additional details on exactly where it is. We're actually also in the process of rolling out a whole bunch of information on decks and on patios. If a railing is broke, just think of some of those things you don't think about, but what a risk it is if your deck railing is broken, somebody can fall, right? There's all types. So we're looking at being able to roll out some of that. We're also rolling out more about the roof. We're really interested in being able to create a lifespan score on how old the roof is, how long the roof has been in place. And then that is primarily important for a lot of carriers because roofing is one of the most expensive things to be able to replace. And we have a bunch of appliance data rolling out. So think of your HVAC system. Those are just an example of some of the ones that are coming.
What I think is so amazing, and I've talked really with all of you, that one of the most exciting things for me is all this rich interior data. And I know we've all talked about that, but there's so many great data sets out there. But, when I look at some of the data that we have on those interior conditions, in conjunction with all the other types of data we have, I find it just really exciting with all the different use cases.
Yeah, let me give you an example. It's actually been a lot of fun I get the fun part of really looking at the data and see how it all correlates. One of the examples of a use case that we really started talking about over the last couple of months is we've rolled out electric panel system. So we have the ability to say if it's 100 amp, if it's 100 to 200 above a 200 amp. So it's really interesting to look at the size of a house compared to the electric panel capacity. So for example, if you live in a house that's 4,000 square feet and you have 100 amp, right, there's probably a lot of risk in that because you just don't have enough capacity to be able to support the house. So it's things like that we really started digging in now is what other types of insights, when you kind of pull it all together, can be able to tell you about risk rather than just looking at one factor at a time, right? Being able to look across multiple factors, across multiple property insights, and then consumer insights. So just really throwing it all together.
I do have to plug a quick podcast that Michelle and I had done recently talking about different factors. So we make insurance fun. We make data fun. So we did a podcast where we shared different scenarios of factors in the house gone wrong. I think one of them was Clark Griswold from Christmas Vacation plugging in all his lights and blowing out his electrical panel. So I don't know if that's covered or not. Maybe we have to have a conversation with Efram, but it just kind of goes to show you some of the fun extremes that can happen. Again, I'm not saying that's covered by insurance, but check the podcast was pretty entertaining and just a way to introduce podcasts. So we can share that in the link, I'm sure. So on that, I'd love to chat with you, Paul, on the different use cases and how Home Factors is adding value in so many amazing ways, from underwriting all the way through marketing.
Yeah, for sure. Happy to talk through this, Larisa. So the thing that I'd want everyone to know is that it's most common for carriers to get started with us in underwriting in that use case scenario. And the way carriers are thinking about the underwriting use case is that really three ways that Home Factors can be used. One is just upfront in risk selection or avoidance. The other is once you're kind of midway through the process in terms of inspection cost savings. So if you know that a home is exhibiting, some issues, you might decide to, inquire further. You can focus your inspection on that item if you want, or you might choose upfront again that that's a risk that you might like to avoid. And then, of course, in renewals. So, do you have risks in your book that you really didn't know about that you want to address? And then similarly, the other side of that equation is, are there risks out there that fit your standards better than others? And how can you be emphasizing, underwriting such that you're picking the risks you want? So that's underwriting. And again, that's where a lot of carriers get started with us. It can have quick bottom line impact in their business, same year. In addition, we've learned that home factors can be used to actually forecast lower PML in reinsurance. And so what does that mean? You go to the table with your broker and your reinsurance carriers, you demonstrate that you know more about homes and some of the issues that we just described and how you're avoiding them. And that allows you as a carrier to shave layers and cost in terms of reinsurance costs from your P&L and have real bottom line impact. Again, that one might be one of the faster ways to have P&L impact. You're actually just introducing home factors as a variable in your reinsurance models, right? Doesn't require really any modifications to workflows. It's just, hey, anticipating, when you're going to be having those renewal discussions and having home factors well understood and part of that conversation. Rate is another area. So as Efram said earlier, Homeowners of America has used home factors in rate. And so what does that mean? When we're speaking with carriers, what's kind of cool is they find opportunities to actually take rate, right, where a risk has been identified. But they also have the opportunity to pass along savings to homeowners of well-maintained homes. And so, this is where we can start to actually price for the actual risk of the property, right? As opposed to some of our more traditional ways of doing that, which are, credit score, how close we are to the fire station, things like that, that really don't necessarily might correlate with, but don't really speak to the actual risk of the property that you're insuring. And so a couple more home factors use cases for you would be claims. This is generally not the first thing the carriers dig into, but if you know that there are issues present in the home prior to a claim, right, you might be able to avoid some fraud. You also might expect that you can more accurately estimate replacement cost, knowing that, this issue was more or less pre-existing, right? And then finally, marketing. We're seeing cases today where it's possible to eliminate marketing waste by targeting the types of homes that you want to insure and avoiding marketing to homes that, may not be the best fit with your underwriting policies. So those are, kind of the key use cases. Again, underwriting seems to be the place where carriers can dig in most quickly and start seeing real results in terms of reduced loss ratios and bottom line impact.
I know you're having some, fabulous conversations with various insurance companies, partners, and so forth. And just kind of riffing on different use cases. And then, when you and I talk, it's another way, an innovative way that companies are really being able to use this data, which is just so fascinating. And speaking of you having conversations, I wanted to let you all know we attend many industry events. We will be at ITC in the fall, but we attend numerous conferences throughout the year. Again, feel free to hop onto our website. We have, contact information there. But, would always love to sync up and chat with you. So with that, I think this is like a really good time now to kind of wrap up with success. We started off today's presentation with some of the challenges, Efram, and I love to hear about all of the amazing successes you have had. I know you kind of delved into it a little bit, but tell us more.
Yeah, so we, as a carrier, everyone wants to be successful, whether it's driving profitability, growing revenue, building surplus, increasing EBITDA. But we really wanted to create a win-win situation for not only our carrier, but our consumer partners, whether they're policyholders, our agencies, and our reinsurance partners. And so leveraging home factors has allowed us to do that. And we'll talk a little bit about loss ratio and loss ratio improvement first. Over the last couple of years, we've had best-in-class loss ratios. We've had significant improvement on our attritional loss ratios, as well as improvement in our weather-related loss ratios. So the results speak for themselves. We integrated home factors into. We were slightly opposite of what Paul was sharing. We started with pricing first, and we took some time to integrate home factors and identify those home factors that would improve our segmentation, improve our overall sophistication, and really added a layer to our pricing and how we price risk. So we spoke earlier about not knowing everything, not having all the insights about a home. And Michelle mentioned a couple, with piping being one. Knowing the type of piping in the home, we were able to identify specifically how piping performed under different conditions. For instance, a certain type of piping performed well under severe or cold weather conditions, while other piping didn't. Certain piping performs well under traditional water losses, while other piping didn't. We were able also to gain some insights about the location of the water heater in a home. It would be natural to think that with a water heater located on the upper floor, that the severity would be higher than if it were on a lower floor within the home. But being able to confirm that through home factor data, it was an insight that we gained by just having that available to us. And so we were able to implement and file home factors in many of our rating algorithms and most all of our states. As new home factors are introduced, we anticipate we're continuing to file those factors as we continue to refine our rating algorithms, which ultimately improve our loss ratios. Having better segmentation is a win for our agents and our consumers. We're able to price them more accurately. We're getting the right rate for risk. We're able to continue to offer capacity to our agency partners, and they can have a profitable book of business with our carrier. From an underwriting perspective, as we introduce our underwriting model with home factors, it improved our overall efficiency. A couple of years ago, we were able to make some very significant decisions for our organization based on our underwriting model that did include home factors. We were able to do it more efficiently and more effectively, and are very pleased with the overall outcome of the decisions that we had to make. Paul mentioned reinsurance. From a portfolio optimization perspective, our reinsurance partners are seeing the results. We're able to share more about the risks that we're insuring. We're able to have cleaner data, better data as we're going out for reinsurance renewals. And ultimately, as a result, over the last couple of years, even in a hard market a couple of years ago, we were seeing improved pricing. This renewal, we saw dramatically improved pricing based upon, again, our loss ratio improvement, as well as just the nature of the data that we were able to provide our reinsurance partners. So adding home factors to our business has been a tremendous benefit to us. It's a win for our organization. We're very enthusiastic and energized about the upcoming home factors. We look forward to getting them implemented both on the underwriting side as well as pricing.
Efram, I can think of no better way to wrap up than that statement. Before we do, we have a few more minutes. I'd love to hear, like, Michelle, Paul, or even Efram, if you have any last minute advice, words to share with us today.
If you don't mind, I'll jump in, and then maybe Paul, you can follow me up. But I know that we spent a lot of time today talking about home factors for risk. And we spent a little bit of time talking about home factors for marketing use cases. We are really starting to get good results on home factors across other types of verticals. So think of insurance agencies, think of home retailers, think of home service companies. This type of data and this type of solution is really working across multiple verticals. And we're just at the very beginning. So we're super excited about where we're going, the additional services that we're going to be able to roll out. I just wanted to add that in a little bit.
Yeah, great additional point there.
And to tag up on Michelle's comment then, so we're seeing agencies using home factors as well as carriers. They can use it to, score their business and understand how to deploy resources against the type of business they can close most efficiently. We're also learning that carriers would love to see us process whole home inspection reports for them to get even deeper insights and more data back on risk. And that's producing a lot of satisfaction in their channel, right? Independent agents can get answers faster because that home buyer inspection report often is within reach of the home buyer who's applying for insurance. So to piggyback what Michelle said, we're learning that in spite of there being some very clear, exciting use cases for carriers, there's more to come.
Mm-hmm.
That's great. One final question, and then I know we're at time, but I had meant to ask you this earlier, Efram. I think you had some recent AM Best results that you could share with us.
Yeah, so based on AM Best data, we were in the top 3 or 4 homeowners carrier from a loss ratio perspective across the country. So we're very proud of those results. And in the state of Texas this year, 2024, we were number 1. And so it was a journey getting there. But home factors, again, was integral in helping us achieve that milestone in our history.
Love it. That is like the perfect sentence to wrap up on. Thank you all. It's always a fabulous conversation with you, with such a great team. And thank you all for joining us today. Appreciate it. And take care.
Thank you.
Thanks.